Good afternoon. This is the Elliott Wave Weekly Update for gold, silver, and platinum being recorded on Sunday, June the 29th at 12 noon p.m. Pacific Daylight Time. I'm going to begin with gold, and we're here in the futures market. And I did make a change, as I've been discussing, that to me, it makes a difference whether this is going to be cycle A, cycle B, or cycle one, cycle two. That what we're involved in is either a C wave or a third wave, and they are so related to one another in terms of how they move, what the internals look like, and all of the above. So I just changed it to cycle one and two, and the primary reason is because I'm seeing that there's still a lot of room in other markets to continue to move higher. And I didn't want to cramp gold because I think on a longer term basis that, yeah, we still have quite a bit of upside to do. So even if I'm going to say we're in cycle wave three, we're going to equate that to cycle wave C. It's going to consist of 5 waves of primary degree, of which only one and two are complete. And then within primary wave three, only of what 5 waves of intermediate degree, of which only one and two are complete. So we've seen how strongly this has continued to subdivide inside of what we might call the larger as cycle wave three. Now, I can immediately just bring this down, put it on the five-year weekly chart. And you can see that's where we're tracking the development of this minor third wave, which are going to have 5 waves of minute degree, of which one and two are complete. We're looking for the completion point for wave three, minute wave three. And again, it really kind of tags us here at 3655, 3666, up above 3600. But I think we can get even further. Now, what does start to put a little bit of a concern to me is the fact it's like, well, wait a minute, how are we counting this in the fact that the minute third wave is already reaching up to 3.882% of wave one, wave three. So either I got to move stuff up or I'm going to rearrange. But right now, I'm leaving it as is. So our resistance actually falls into place basically up here, 3800. And so within this minute third, I've got minuet one, two, three, and four. We're in minuet wave five. Now, again, what is so often the case, particularly in gold, it's that fifth wave that'll really expand, that'll really kind of just subdivide and subdivide. So that's what's kind of happening. We've gotten a really magnanimous rally inside of minuet wave five, but sub minuet wave three, that's the one that kind of just climbed. So I'm going to break it down. I'm going to bring it down to the daily, and that's where we're going to take a look. There are two situations that how I've got this marked. And then I'm saying one, two, three, and I could put a four there. I could put a four there. And if that's the case, then the four, and then we're working on the five. And so this would just be a pullback in terms of one, two. And I need to change that. But the equivalent, the levels would be, the support levels would be if the four goes here and we're in the five, and we're coming just pulling back, it's like one of five, two of five, and that second wave has already reached 0.618 at 3254. That's going to be support. Now it kind of got pretty close with the low on Friday being 3266. So it could be done, in which case, if it is, it needs to turn and it needs to rally with strength. So what it would suggest is that we're dropping into a third wave of the fifth. So again, that would put the four here, one, two. Now, outside of that, you'll see this secondary being that if this is A of four, B of four, and we have a C wave. if just those that trade gold, you're realizing that gold's had a little bit of a problem keeping a rally right now, even with a lower dollar. So the dollar moving lower. So it has its own deal going on. And I think a lot of that, to be honest with you, is the increased options trading in GLD. I mean, we had on the June expiration, we had a pretty strong downside type move leading up to that June expiration. And then we rallied a little bit and then we dropped back down. But again, last Friday was an expiration. So I don't believe that GLD has an end of quarter expiration like the indexes do. But I could double check because if it does, let's just kind of take a peek. I want to see if gold has, so we're going to look at GLD. Oops, GLD. It does. It does have a quarterly expiration tomorrow. So gold does have it, and that could be weighing down. You'll see on Friday we were down 556, and that might have been in anticipation of that. But there was also an expiration on Friday. So not sure what. So again, going back over to this chart, there is. So we still need to allow for the market to continue to move lower. I don't think it's necessarily going to drop 200 points, but we reached 32.54 basically. So that still should be support, but the next level down is 31.94. And then if it's a C wave, complete C wave, we may drop a little bit further because that measures down to 3100. Right? So if we're considering this as an a B, and we're coming down in a C, then I think we can get down here. If it's going to be the fours here, and this is wave one of the next move up, then I think we should be able to hold here. It's not unusual if it's one and this is a two, wave two, 0.618 down to 0.786, can get as close as it wants to 3170.7, right? Can get as close as it wants, it just can't break it. Then it's not a wave two correcting a wave one. So I'm leaving that open right now as to what is going on, because if it does come down and break it, then we can get down to 3,087. Not totally unhealthy, maybe a little bit uncomfortable for those that have kind of gotten long within the sequence looking for that next leg up. I still think that next leg is going to happen. And I still have much higher levels, of course, for the market. Now, as soon as we finish the four, and if this is the five, then I'm looking for that five probably to start coming in. I put it here as if we did that full four. But let me just move this back. And you can see there's not a big difference. So we have 3630, 3680, and 3824. So right around, the 3700 area is what I was actually thinking. And then for the minute third, we're just kind of going through the sky. But we need to get up to these levels in order to finish this. Even though that's up there, it's now more important for this minuet fifth wave. And I actually can but I did that, and you'll see that the small one. So I did recount this. Instead of putting that three up here, I put it internally. So that makes it a little bit stronger that it could be that four is there. And then we get that additional hike up to complete the minuet five and the minute wave three. Otherwise, we're just up in the moon. We're doing a moonshot. Is that possible? Of course. But I tried to just get deeper inside of this to take a look. I go 1, 2, and then 1, 2, 3, 4, 5, a 3, and then a 4, and then we're putting in the last minuet wave 5 to complete that minute wave 3. So these actually still fit up to, well, actually up to 4,000, but I'm thinking we're going to get it, we'll finish it before. So 3,700, 3,800 for this final push, and then we do another correction. And again, it's going to be looking for it to come back down to here, possibly even down to there. Now, I because of the intensity of the rally, and I don't think that the underlying factors have really changed, uh, that the purchasing of gold by institutions, but more directly by central banks. There's this shift happening where what we're seeing is because of everything that's happening within the United States with trade wars and all the rest, we're seeing a lot of switching. And so because the dollar so far still remains the international currency of trade, that has kept a lot of upside alive in the dollar. But right now, the dollar is kind of getting sold more than it's getting bought. Still under 100, still in the index, under 100, under 98. So we're continuing to see the dollar getting sold. And I think there's a lot of switching going on and the fact that the lower dollar should support uh, gold, that's gold priced in dollars. If we whenever we're looking at gold priced in say um, the euro or other currencies, we're going to see a much different setup. And so I do think that has a big thing going on. There is they are pulling in gold. They're purchasing gold, and I think that's going to continue. Now, anything that kind of happens economically, it should still, or even geopolitically, that would be even better. If the market really, if the equity markets really turn and start to come down, I think we will see a move, U.S. move from many things uh, into gold. And but also, I think that if we start to see sales of the treasury market, right? U.S. debt, and also mortgage-backed securities. These are just massive amounts of mortgages that are grouped together and sold as an investment. And we're starting to see that countries such as China, thus far we've seen them in the treasury market. And so again, how all of this is going to balance out. But I think most of it is supportive of higher gold prices. That's my main point here. So I'm still considering that gold is definitely, I think, going to hold itself above 3,000, which is major, right? And get itself up closer to 4,000. And I think over the longer term, we have much higher levels. We have 4,000, 4,500, 5,000, and maybe even more. But we'll track it as it happens. So right now, I think on a weekly to a little bit shorter basis, I think we have the capability of coming down to finish what could be a fourth wave, or it's done here and this is 1, 2, and we have a little bit more room if the market wants to put in another little bit of a downside uh, with relationship to tomorrow's quarterly expiration and the options in GLD. All right, so that is that. And then we still have our upside levels. Going over and taking a look at silver. Silver actually is not performing as severely to the downside as we have been seeing in gold. It's been able to rally back up. But here's well, I kind of lowered the degree. So let me just go back out and let's look at the 5-year weekly. So again, we have an ABC. This is a Y wave. Let me go back out to that maximum. And so there we have it. We have the ABC, that's the W, and then an X, and this is a Y wave up. And actually that 100% at 57.95 or 58, I don't think that's unrealistic. But when I was looking at it here, I was counting this as a minor 1, 2, 3, 4, which would suggest that we're in minor wave 5 up to finish intermediate wave C, which would then start to put the caps on that primary Y wave. So I thought, that's not going to work because I still see a lot of upside left before we would be done with that Y wave. So I brought it all down a degree. So 5-year. bringing it down. So from there, okay, there was the A and the B, so those are intermediate degree. And then here, and I think actually we're finishing, folks. If this degree is what's actually in play, this is minute one, two, three, and four. We're on minute wave five, and that's just a complete minor wave one. Minor wave one. So again, when we're thinking about, okay, well, can we have this move up to 58 or maybe even higher? I mean, there are some analysts who are considering and calling for, again, very, new all-time highs in silver, which is above 50. This was 49 something, and this was 50 on the nose. And so, but if we're going to go there, we could get, yeah, silver could be at play here. Could be. Now, I'm technical. This is all technical. There's always going to be an underlying reason of why people are buying silver. Where is it being used? How is it being, the reasons behind accumulating silver positions. So that part, I think we can go look it up. But here, on a technical basis, intermediate wave C is going to consist of 5 waves of minor degree, and I think we're just finishing wave one. So wave two, wave three, wave four, wave five, we could be here, but you can see that it is now longer term. I'm not looking for this move to happen quickly. We could start spiking, which we have done, which we've seen over in platinum, by the way. And if it does, it could spike in that fourth wave and then bringing it back down. Let's put it on that daily. It could spike in this fifth wave up, of which we have one, two, three, and four. And that's only if this fourth is completed. I've left another additional, I mean, it's already gotten down to that first support line, 382, and that's at 35.26. And this low was 35.19, so 35.20, so all there, and basically hit it on the nose, and then put in a decent rally, but then it came back down pretty strong on Friday. And so I got to leave open that this was A, this was B, and we're going to come back down to C, which could bring it all the way here, but I would look for a little bit more, and that the 50% marker is at 34.60. So yep, it could. It could slightly start to break below 35. And actually, as long as it gets a new low below 35.19, well, then it's fulfilling the pattern, and that wave C puts in a new low below wave A. And but we have that support level, actually 34.85 down to 34.60. And as long as that all holds, then we get turn it, and then we're running up in a minuet wave 5 to complete minute wave 5 to complete minor wave 1. And that comes up to here. So we're already now looking for this to kind of break a little bit out of the triangle, finish it up, and a 5, and then put a minor wave 1. So getting back out again, what we're looking for is this first minor degree wave to be somewhat of a diagonal. And then the 4 overlaps 1, so leaves that open, and we get this, and it just kind of shoots up and finishes this. And I'm looking for that, 41 to 42. And there's our resistance for that minute fifth wave. So again, I think silver still has it, and then again, we drop one more time. All right, finish 5 up, we come back in 3, and that's our targets. And we'll have more on that. So that whole fourth wave brings us back onto this window. So it looks pretty good, I think, for silver. And the long-term basis, right? The long-term picture is still very bullish for silver. And of course, markets can change things because I'm looking for 5 up, and I might have to change the degree again. Depends on what happens and how things trade after. But right now, I'm still looking for the completion of this 5. So that's still looking pretty good. And now, moving averages actually on the daily, all still very nice. Very nice. There's the 200, this 78, and there's the 30, and there's the 8, kind of waffling around because we're just playing out there. Silver also very active in terms of, I think in SLV, there's also an options expiration tomorrow for GLD. There's going to be one for SLV. And that I think the options are very heavily traded. And so they have a play with this future. All right, finally, let's go take a look at platinum. Platinum has been to me astounding, and I kind of also changed the labeling uh, in terms of degree, and that let me go back. Let's start out here at this maximum. What we're working on is a primary B wave up. So there was the 5. There is primary a primary B wave up. Everything is in line. We got the 3 waves. There is intermediate A, intermediate B. B was a triangle. And then there was a triangle within the triangle in terms of wave E. So that's all completed. We thrust it up and out of that triangle really strongly. And last week, getting up to 1440, which was amazing. And so it kind of brought about where I took a step back and I thought, okay, what really is going on? And I switched and I'm now within wave C, intermediate wave C, 5 waves of minor degree. So I'm thinking, okay, this is getting interesting. So I got 1, 2, and then 1, 2, 3, 4, and a 5. And I can bring this down. That's here. Yeah, it's easier to see. This is the 3-year weekly. So we have minor 1, minor 2, minuet 1 and 2, and then 1, 2, 3, 4, 5, minute 3, minute 4, and minute wave 5 to form minor wave 3. So if that remains the case, I can't tell you that they're not going to come back in on Monday and shoot this thing higher one more time. Um, I don't necessarily have resistance levels. If should it happen, I'd have to kind of start connecting some of them into here to kind of show me how this could extend even further. If I bring it down and just look at the daily, it looks pretty clean. So I'd have to run it this to there, and we've already surpassed everything. So I'm still thinking we're in that minor 4, which will be an ABC in and of itself. So if we're going to go back and rally, we may, but not really looking for additional highs yet. I think within minor wave 5, yes, but I think we need to get this minor 4, which pulls us to that support in the previous 4th wave, which is right here. 1342 or 43 down to 1237. That's the previous 4th wave. And we come down in that 4, it holds, and here we have just the minor degree, 2.236 at 1327, and then 382 at 1256. And then that low is 1240. So all in the hood to come back 382. And then we finish that up, put the minor 4, and then we start to rally again. Once I get that, then I'll be able to put in additional. But right now, what we're looking at is that a C wave would be equal to an A wave at 16.6. I'm going to either run it up or down because I have superstitions on numbers. So it would be 667 or 665, or maybe a little bit higher, a little bit lower. And that would be the intermediate C wave, bringing it back out again to here. I got to take it all the way out to the maximum. Sorry. That the C wave up 100%, where wave C equals wave A, which is actually the most common. So up in that area, 1,665 to 70, let's call it. But the exact level is 1,666. So that's where wave C would be equal to wave A. It can go a little bit more. It goes 1.618. We're back up to 2,100. That's just the pure math. That's not suggesting that that's where this market's going to go. But this rally has been extremely intense. And once again, there are a lot of countries that are uh, just buying and I think storing a lot of platinum. So the precious metals have become stronger because of a lot of central banks or just, the The governments of these countries they're just storing platinum, silver, and gold. So once again, we're going to find out eventually what that's all about. But right now, um, it's really a beautiful ABC up. Still a little bit more to go. Got the 4 done, and then we'll get that 5. That's a minimum, I think. And then this would be up into here. And it is possible. We saw it happen, but this was way back in 2008. And then we got that nasty decline. That was the initial of the great financial collapse. And then, of course, that just produced the rest of it until we bottomed it in the um, pandemic. So it's an ABC up, then we come back down. So it's an A, a B, and we're going to come back down in a C wave, a primary C wave. So wherever we get, it should be a decent short, a little bit longer term. So that's why, but we got to be careful because you don't want to call that top and start stepping in, and they're not done buying yet. So we still have these upper levels, and it is a B wave. It is a B wave. You have to be able to consider that you've got to have all the levels. And if it's an irregular B wave, then we're looking at 1.236 or 1.382. And you catch that from this one. And you put that on right there. So yes, there's a lot of potential in platinum according to our fib levels and just the wave pattern. All right, that is going to be it for the precious metals. Some small changes, but more on a short-term basis. The longer-term picture in all three still remain fairly bullish. Our next update will be next week.